I want to bring in John Steinberg, the president and COO of BuzzFeed, has already done 2 hours of guest hosting on Squawk this morning. It's great to have you.
Thank you so much,
John. Welcome. This is how it's supposed to go?
Well, let's dig into the numbers. Let's start there right now. So we have a $30 billion market cap. That equates to basically a $32 billion enterprise value if you take out cash and a few other things. So now, and I'm using Rich Greenfield's numbers at BTIG, we're now trading at 30 times revenue, price to revenue, right? For a comp, Facebook is 10.6. Going into today, when I thought it was going to be a $20 billion company and I was looking at other comps, I could find Yelp out there at 14 or 15, but we're expensive now. I think this company's got a big future, but it's expensive.
It's expensive. At
Too
this
expensive.
Price right here.
Too expensive at this price right here. Absolutely.
Despite growing at 3 times their peers?
No, and you know that I'm a bull on this whole sector overall. I think when you look at these social companies like Facebook, LinkedIn, Twitter, YouTube, which we should actually talk a little bit about today, they're changing all of the consumption of media. I think Twitter will certainly beat revenue drastically compared to what people expect. It'll be profitable. It already is adjusted EBITDA profitable. But right here today, it's too expensive.
But if you believe it's going to beat revenue, and perhaps lots on the street think that too, it makes it cheaper than it would otherwise appear just on those metrics alone.
I think even when you adjust for growth, even when you put in the fact you get a 78% revenue growth next year, you say they hit 18% EBITDA margins, it's still tough. And I'm the last one to say it's expensive.
Or is it about 3, 5, 10 years down the road?
I mean, you can find any justification. I mean, to Carl's point, you know.
That's what the trajectory is going to be.
Yeah.
It's not so much about are they going to do okay in year 5. It's really about are they going to be in year 10 on a par with Google, where you're willing to pay up now for that kind of
Well, I mean, look at how cheap Google is compared to this. I mean, Google trades at an EV of 5 times sales, right? So we're in the outer limits here of rationality.
John, it won't be long now. We're going to get a quarter, right? We're going to have a conference call.
Yep.
We're going to have a 10Q. We're going to have an earnings release, an income statement. What do you want to see first? Do they need to roll out video ads in the next 6 months?
I want to see Salesforce productivity. That is what always drives these businesses. We only have 3 companies in the whole world now that buy ads, right? With Omnicom and Publicis merged, you have them, you have PP, and you've got one other one, right? So basically now we need to see, is Twitter building up the domestic and international sales force to go brand by brand and explain this? Are they innovating in products? Do they roll out an app install ad? Does the Twitter video product make money as well? And do they dramatically simplify this product to get beyond the 230 million users? Do they make this something that can really be broad?
Great point.
John, great to see you.
Good seeing you too.
So much.
Thanks for having me, guys.
Steinberg with BuzzFeed joining us here at the desk. Our next guest was an early back